Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I am glad you could join me. I am sorry the market is down, but we will talk about how you can make money in a down market. It's rather simple. It's just like buying an ETF. We've talked about it every day on this show for the past several days, and we'll do it again today just so anyone new watching can also get on the right side of having some gains again in a market that is just totally full of fear, uncertainty, and doubt. And of course, the conflict over with Russia and Ukraine is a big part of why the market dropped so far today. But we'll talk about that in greater detail. I also want to share with you a strategy that I'm using to prepare for the next bull cycle, right? Even though we are just getting started in a correction, a heavy correction, and even potentially going into a bear market, and then maybe even the R word, recession, which I don't want to talk about quite yet because we haven't reached $100 per barrel for oil yet. So as long as we don't cross that threshold, then maybe we'll skip the R word for now. But moving off of that, with stocks sinking, and actually, before I get to this point, the most important thing, the whole reason why we do this live stream is for you. So what's on your mind? If you have a question, leave the ticker symbol and your question in the comments. We will go over it live during the show. All right. Thank you so very much again for joining me. All right. With stocks sinking, it is a great idea to start putting together a shopping list of stocks that you want to own, and not just the ones that you want to own, but at what price do you want to own them? There are so many stocks right now with deep discounts, especially in the technology sector. And it can be hard to decide which ones to add to our shopping list. So here's advice. Pick 10 the 10 stocks that you believe in the most, that you have the highest conviction in. And those are the stocks that you should be watching closely, set price targets for where you want to get in, and even set stock alerts to remind you of, hey, the stock's reached that point now. Maybe you should start looking for an entry point. To give you a example, one of my top 10 is Generac Holdings, and the ticker symbol is GNRC. Generac Holdings, all right? They are a favorite of mine. I love this company. They manufacture power generators, and they also have jumped into the business of battery storage for renewable energy like solar. And their battery, as a matter of fact, their battery storage is called, for the residential area, it's called a power cell. And over here at the right side of the page, this is what it looks like, right? It looks just like Tesla's power wall, and it basically does the exact same thing that a Tesla power wall does. It just doesn't have the Tesla brand behind it, but it's doing the exact same thing. Now, getting back to the stock chart, since this is a company that I believe in a lot, and I really like it. And of course, they do way more than just generators and battery storage. But that is a big part of their growth story. Now, if we look at this company, let me get the chart up here so we can at least see the past couple of years on the chart. We got 2020 so far, we got 2021, and we just about got 2020 on the chart here too. Just another month. There we go. So this is what they have looked like over the past 2 years, a little bit more, 2 years, 2 months. It's been up and to the right, and they've been in this beautiful trading channel, right? Every earnings come out, they go up even more. Another earnings come out, up and to the right. Another earnings, up and to the right. That was until they reached their peak around the beginning of November of 2021. And from there, they started to fall. And now that we're in this big pull down, this big correction heading into a bear market, and remember, for the indices to come down 10%, then you are technically in a correction. When the indices come down 20%, you are technically in a bear market. Just like you are technically in a recession when you get two straight back-to-back quarters of negative growth in the country you're in, right? GDP. So what I'm looking for Generac is sub $200 a share. This thing was at $524 a share at its peak at the beginning of November 2021. But it has pulled back and it is falling pretty darn good. So sub $200, Generac, it's one that's on my shopping list, and I want to get in at under $200. Now, I would love to get into Generac at $175 because that would be even better. And at $200 a share, that's about 62% off from their all-time high. That is a really good discount. And of course, if I can get in under 175, that's even better. So this is what you should be looking for right now, so you're ready to jump in when the time is right. So what stocks would you put on your shopping list? And what is the price point you would like to see to get into that stock? What is the right discount that you would like to put on the stock that's in your top 10? For me, 62% off from their all-time high is a really good discount, and I would love to get in sub $200 for Generac. So that's one of mine. As an example, I'm sure you have many, many of your own that you love and you would like to own and it be part of your portfolio. So in a bear market or in a big correction like we're in, it's good to build these shopping lists so when the market does finally turn around, we are ready for it. We can jump in. We already know what we want and we already know the price points that we want to get in at. And then it's just a matter of accumulating as many shares as you can, because that's the name of the game. The more shares you own, the more you'll be rewarded when the market does finally turn around. Okay, so that's a clean example for me. Generac, it's in my top 10, and I want it sub $200 a share, which would be a 62% discount from its all-time high. Okay, since we just mentioned the market, let's go ahead and quickly talk about what happened in the market today and kind of review why. Well, after we talk about the market, I want to review how we can make money in a down market. That's very important. I know many of you want to know the answer to that question, and we have the answer. Let me just quickly go over the market today. SPX is the ticker symbol that I use to chart the S&P 500 in TradingView. There is a link in the description for a free account to TradingView, and you can see today we finally closed inside our target here that we have had now for a while. We almost got down to the intraday low set on January the 24th. Today, the S&P 500 closed at 42.25. The intraday low on January the 24th was 42.22. 22 points away of the 4,200 target I've had for the S&P now for over a month. And today, we finally closed well in our box that we had here, and we're only 25 points away from 4,200. So again, man, this has just been a sharp fall. Now, stocks did start out in the positive today, and very positive as a matter of fact. But those gains did get completely erased by the time the market closed. With investors nervous about the Ukraine crisis, the consequences of Western sanctions against Russia on growth and inflation, and of course, investors sold into every rebound attempt throughout the day. President Biden did announce new penalties hitting the builder of the Nord Stream 2 gas pipeline today. The Dow declined more than 460 points to close at its lowest level in 11 months. The S&P 500 fell to 1.8%, extending losses for the fourth day and fell deeper into correction territory. And we'll talk about where we are year to date too. The NASDAQ, it shed 2.6%, representing the weakest in mega caps and growth stocks. The Russell 2000 fell 1.8%. Now, today, the first rebound attempt was right at the open, which saw the S&P 500 up as much as 0.9%, amid gains in all of the 11 S&P 500 sectors. That was driven primarily by mechanical factors on the belief that the market was primed for a rebound after being down for 3 straight days. However, the market quickly turned negative. There were only lower highs as the session progressed, as again, investors and traders were selling into any rally that we got, and feeding into the general pessimism in the market and, of course, the negative price momentum. The latest Russia Ukraine headlines kept the buyers hiding and on the sidelines. Growth stocks were at the forefront of selling interest, taking the S&P 500 consumer discretionary, excuse me for the nerves there, down 3.4%. Information technology down 2.6%, to the bottom of the different sectors. Now, right before the close, the S&P 500 briefly dipped below its January 24th intraday low of 42.22. 42.22. So the wick of the candle broke that low intraday, but it didn't close down below 42.22. It closed at 42.25. Now, I do believe that we are going to 4,200. I think, there are headlines coming across the wire right now that are talking about Putin potentially crossing the line in a matter of hours. And if that does happen, you can expect another bad day in the market. Now, the energy sector was the only sector that closed higher, rising 1%, even as oil prices finally settled the day lower by 0.2% to $92.12 a barrel. Away from equities, there was no flight to safety in the Treasury market, once again suggesting that the stock market's misery was owed to more than just geopolitical crisis. And I think the Fed potentially hiking into slower growth is going to be a problem. Many earnings reports that have come out so far have said that in the second half of 2022, companies are going to see a slowdown in growth and may even go negative. That does not look good, because if consumers are going to stop spending and stop buying, but the Fed is going to rate hikes 25, 50, 75, 100 basis points, that is going to spell trouble for the markets. Now, today, the 2-year rose 5 basis points to 1.6%. The 10-year rose 3 basis points to 1.98%. I've said it now for weeks. the 10-year yield, it has got a very strong resistance line at 2%. And that's why we keep seeing it going up to 2% and then falling back down a little. And it just can't seem to break through and hold. But if Russia crosses the line into Ukraine, that could be the catalyst that launches some momentum to get the yield over 2%. Or then again, it could do the complete opposite. Because the way bonds work, when you go in and buy, the more people that buy, the lower the rate comes down. The less buyers for bonds, the higher the percentage goes up. Because it's a guaranteed percentage, right? So if it would ever get to like 7%, of course people would pile into it, because 7, 8, 9, maybe even 10%, that's what the market is supposed to return on a yearly average. So if you can guarantee 7%, oh my goodness, people would jump into that like crazy. All right, here's where we stand year to date. The Dow Jones is still in the number one spot, but it is getting so close to correction territory. It is down 8.8% year to date. The S&P 500, it is now in correction territory, down 11.3% year to date. The Russell 2000 is down 13.4% year to date, and the NASDAQ is getting very, very close to a bear market, down 16.7% year to date. And remember, it's 20%. That's when you are technically in a bear market, getting dangerously close. All right, how to make money in a down market. This is the strategy I've been using for several weeks now. I'm going to show you 4 places that you can make money when the market is going down. First, all of these are called ETNs, okay? They're just like ETFs in the sense that you can buy it with no problem. It's just like buying a share of a company, all right? When you buy a share of an ETF, this is like the same way, except the ETN, it is linked directly to an index like the S&P 500 or the Dow or the NASDAQ or the Russell 2000. But what it does is it is tracking it in the inverse, right? So when the S&P 500 is going down, it's actually going up, okay? So the first one is SPXS, all right? Now, this is the complete opposite of the S&P 500. And you can see here, we reached the target that I set for this. We reached it yesterday, but we blew past it today. The ticker symbol is right here on the screen in green. It's the SPXS. Let me circle it right here, just so you can see it right there. And boom, SPXS. So when the S&P 500 is going down, this is going up. So today it returned 5.5% and nearly 1% in the after hours. Now, the other thing to know about this one particular is this is a 3x, okay? So if the S&P 500 goes down by 1%, this one goes up by 3%. But on the reverse, if the S&P 500 went up by 1%, this would go down by 3%. So you do have to be very, very careful when using these, because if the market flips and you get a rally, then you can be hit hard. But this is a way to make money in a down market. And I've been using it now for weeks, and it has been a pretty good ride. I feel sorry for everyone who is, in the regular S&P 500, but over here on the SPXS, we're doing pretty good. Now, if you would rather short the Dow, as you would say, this is very similar to shorting using options, right? Except you don't have to worry about the complications that options brings. This is just as easy as buying one share of a company. Heck, you can even buy fractional shares of this if you want. Okay, so if you want to go negative on the Dow, it is SDOW, SDOW. That is the ticker symbol you would use. And let it load there for you. As you can see, this has been moving very nicely. This was up 3.9% today, while the Dow was down. Okay, so this is shorting the Dow. What if you want to short the Russell 2000? Well, TZA. That is the ticker symbol. And again, this is a 3X, okay? This was up 5.5% today and up 0.5% in after hours. This is for small caps. So if you want to go negative on the Russell 2000 TZA, this is the one you want to use. Now, if you want to go negative on the NASDAQ, you want to use TECS. TECS. That's the ticker symbol you want to use. If you want to go short the NASDAQ, we made 7.6% during regular session today on this one. This one's actually down 0.2% in after hours, mainly because we've hit a line of resistance, the 200-day moving average. You can see back here on January the 24th, when the wick went all the way down, right, for the NASDAQ, it went all the way up for the TECS and touched that 200-day moving average, and that was a very important line. And that's why it stopped here now. So it's going to take a little extra momentum to send the NASDAQ down any further than it is right now. If you look at the money flow index, this thing is off the chart and way oversold. And as a matter of fact, yesterday and today, we got a sell alert for this particular one because it has run so deep, 7.6% today, right? All right, I hope that makes it a little easy to understand how to make money in a down market. It's just like buying regular shares at a company. It's just like buying a share from an ETF, but this is an ETN where it tracks an indice and does the inverse of it, and it's leveraged 3 times, 3x. Okay, moving off of making money in a down market, let's just check in on Bitcoin, BTC USD on TradingView. And last time I checked, it was down a little bit. And it is still down 1.5%, 37,671. You can see that it has really broken form here. We did seem like we were getting a reversal off of this bottom on January 22nd, but that's been broke over the past week or so and just been falling. All right, Ethereum, ETHUSD. Again on TradingView, we're at 26.35, and whoa, we were just positive there for a moment. Looks like Ethereum might be trying to bring its way back up. It's down 0.1% right now, and if you look here, the wick for today's candle, it bumped up against resistance right here at right about, let's call it 27.45. Looks like we got a little bit of resistance there building. It tapped that today, and then 2 days ago, it also tapped that and just couldn't break quite above it. Uh, just a tiny little bit, but then fell right back down. So here we are now, and we are flat, a tenth of a percent down. It was green for a second there. So there's Ethereum. All right, let's do our deep dive of the day, and that is Palo Alto Networks. Ticker symbol is PANW. Palo Alto Networks. They reported their earnings yesterday after hours. And going through it, if we look here, they've been in this trading channel for a few months now, for about 6 months. And they hit their peak, their top right here on December the 28th. And a bit of a downtrend there for a while. And it got broke there for a couple days, middle of February, and then hit resistance right here at around $537, $38 in that area, and then it fell off. But right now, with today's earnings were pretty good, or yesterday's earnings for Palo Alto Networks was pretty good. You can see the stock made a pretty decent move here. It finished the day up 0.4%, so that's not really much of a move, but it is now sitting to the south, right to the bottom of this support line here that it's been using in its trading channel. And if we go back, actually, you could probably say it started here on November the 30th. Palo Alto Networks really started trading sideways instead of, in its trading channel. Even though it stayed in its trading channel, we can really see a price range here. A bottom around $480 to $82, and then that top right around $537, $38. That's been the range that's been stuck in. But the earnings were actually pretty decent with Palo Alto Networks, and they were trading higher. They're just slightly higher to end the day after the company reported a big beat with its Q2 earnings report. So Palo Alto, which is seen as the gold standard in cybersecurity, they continued to experience a strong demand environment that drove billings, revenue, and EPS way ahead of guidance. Palo Alto also provided solid guidance for Q3. And that's really what we want to see, right? We want to see good guidance because a lot of companies just haven't been providing that guidance. But cybersecurity is definitely in high demand. So Palo Alto Networks, they continue to benefit from the robust demand of cybersecurity. Even given the emergence of Omicron during the quarter, the company did not see any changes in IT spending patterns or a slowdown in companies investing in IT systems. That resilience is evident in the company's numbers. Palo Alto, and we can pull them up here, Palo Alto posted 5 consecutive quarters of revenue growth and 4 consecutive $1+ billion quarters. Palo Alto has also seen an acceleration around trends such as the shift to the cloud and the need to enable employees to work from anywhere. Management does believe these trends are still in the very early innings. Sorry about that. This enthusiasm shows that Palo Alto's billing guidance, which is a key operating metric for investors in terms of evaluating the sales pipeline, in Q2, billings growth accelerated by 32% year over year to $1.61 billion, nicely above prior guidance of $1.51 to $1.53 billion, and a noticeable step up from Q1's 28% year-over-year growth to $1.38 billion. Billings guidance was, or for Q3, was really solid as well at 0.59 to $0.61 billion. Another highlight is that Palo Alto is increasingly winning larger deals, largely fueled by clients increasingly signing up for multiple Palo Alto platforms. For example, 47% of Palo Alto's global 2,000 customers use products from all three of Palo Alto's platforms, versus 38% just a year ago. And its $1 million plus customers grew 26% year over year to 1,077. This is a major factor behind the acceleration of Palo Alto's growth and billings. This quarter was not perfect, though, as operating margin dipped year over year to 18.4%. But that hiccup was expected due to higher product and support costs. Now, based on the stock's reaction, and we can hop back over and look at that, investors are not overly concerned either. The silver lining is that operating margin was up quarter over quarter. Overall, this was another great quarter from Palo Alto. While Palo Alto's EPS and revenue upside was generally consistent with prior quarters, the billings number, which accelerated meaningfully from Q1, was particularly strong and is likely a big reason for the move in the stock. To see billings growth exceed revenue growth is a great sign that customers are moving full steam ahead on cybersecurity spending. Final thought, I had a little concern over the past few quarters that Palo Alto's growth could be maybe starting to slow just a little as the company started to lap pandemic fueled buying from last year, which were big numbers to beat. But those concerns have been put to bed, as the company is clearly benefiting from the shift to the cloud, as well as the shift to work from anywhere. And all that off-site security needs a company like Palo Alto Networks backing it up, protecting it, and making it safe. So that's what I think about Palo Alto's earnings. I think they were excellent. I think guidance was also excellent. And this may be a good company to put on your shopping list if we can get more of a pullback. Because when you think about what should be on your shopping list that we talked about at the very beginning of this episode, you want companies that have pulled back significantly, that have a significant discount, right? If we look at Palo Alto, let's see here. They're down 14.2% year to date. That's really not that bad compared to all of the 60, 70, 80% discounts that are out there on solid companies. So I know getting your shopping list down to the top 10 will be a hard one to do, but it's necessary to build your portfolio for the next phase in the market, the next bull run in the market when it comes. I'm not saying it's coming tomorrow or the next day, but when it comes, you'll be ready. All right, that's everything that I wanted to cover in today's video. I greatly appreciate all of your support and watching. If you could, click the like button, take the URL, share it wherever you can, and click the first link in the description to get our top 10 stocks list and so much more. We just updated our momentum list. It went out last night. We also have an update on our value stocks list that will be going out later tonight. If I said momentum, I said last night, right? Yeah, it went out last night. Value, we've got our top 10 update going out tonight. So click that first link in the description, become a member, and you get instant access to our top 10 value, our top 10 growth, our top 10 dividend, our top 10 momentum. That's 40 high quality stocks ready to choose from that we constantly update, and we're constantly researching every day. So as the market evolves and changes, so do our lists sometimes. That's why we say you always have the best names available. All right. Thank you, ladies and gentlemen, for doing that. And thank you for joining me for Ticker Time News. I'm Adam, and I'll see you in the next video.